Well, the Dow has made 3 attempts at 20,000. I guess it's trying for a fourth today. Interestingly, back in 1999, it took the Dow 7 tries to break through the 10,000 level. And then when it finally did, by more than a point, it quickly reversed on big volume the same day, correcting, and then from there, over the next couple of days, it corrected 4.6%. Eventually, that would be 2 weeks later, it finally managed to do an earnest break through the 10,000 level, and then it rose rose over 10%. So I don't know, maybe we get a replay of that. It does seem like obviously there are traders that are trying to manipulate things in their favor as the Dow approaches 20,000 here. And of course all eyeballs are on it, all the media news stories are on this, even though it's just a number at the end of the day. But it does bring to mind Livermore's talk about the century mark rule. Well, that does apply to round numbers, especially large round numbers like this one. So if we get an about face like we did in 1999, I think it was May 1999, that's almost what you call a layup trade, where you get a high volume reversal which closes at the low of its trading range for that day, and then it was the next couple days that the Dow got hit pretty hard. Well, the whole market obviously got hit pretty hard.
That was actually in March of '99, so you can see it right here. That's where it cleared. You see where it cleared right here, and then from there it rolled back, and then finally it set up again. It actually did it a couple of times, didn't it? Like once here, again here, and then finally. So it's 3 tries, and then it took off. Anyways, just thought I'd point that out.
And over in precious metals land, we've got gold and silver on clear downtrends. I know that some were hoping that silver was going to actually find a floor because it was bucking the downtrend in gold, but nevertheless, any investors woke up with a rude surprise when silver SLV had a fairly substantial gap down in its pattern a couple days ago. Accompanying this downtrend is also the price of bonds, especially the ones with longer dated maturities. They remain in sharp downtrends. That's just to say that the yield curve continues to steepen. And right now we have a wait and see with in terms of Trump's policies. He hasn't even been inaugurated yet. There's been news stories about how the Clinton camp, but not of course the Clintons, but people who support Clinton are attempting to have a recount and also putting the vote to the House in terms of who should really be president. But I think that would cause a huge backlash and revolt of some sort if that were to happen. But anyway, that's all politics, and we've got a number of names on our focus list that have been doing pretty well. You'll notice the number of names has increased, but we're very selective about what we put on there. NVIDIA is one of our long-standing names that seems to buck any market weakness, and it's just hit the century mark. So again, calling to mind Livermore's century mark rule, it seems like it's getting some resistance up here. So we'll see how it finishes out the day. But obviously, if you're sitting on this one, and you're probably sitting on a nice profit, especially if you added it when we first put it on in May on that viable gap up on strong earnings.
Hey, Dr. K, one thing I'd point out here, I'm actually short this thing. I got shorted at about 100.39. This thing's had a long run, first of all, and the movement over the last 3 days came on a buy recommendation from a no-name brokerage, and so it looked a little suspicious. Then I've been watching this thing go up, and then this morning finally got some juice off of the short, or on the short off the peak at the 100 level. Now, I think this is key to watch because NVIDIA has been a big leader, and if it fails at the 100 price level, that probably tells you something about the market. And I would also say that if in fact the market does roll over here, then you could see this name top here and come in at least down into the 20-day line, maybe break down further than that. So that's something to keep an eye on. And I think also in terms of what it might mean for the general market, it has some significance there as well. So that's just one thing I pointed out about NVIDIA to watch for here.
It is a leader, and so as a general practice, it's always good to keep in close focus on how the leader is performing, because it's a good barometer for the health of the market. And as far as well, this brings to mind the model book studies O'Neill did since the 60s. Clearly it's a model book stock. Some of these stocks can certainly run a lot further than people think, but this type of market environment also has really had very few types of model book names. And so that's just to say that perhaps the odds are against NVIDIA just continuing to run higher and higher. If the markets can manage to continue their uptrends, then I suppose NVIDIA, being a leader, should continue along as well. But that does remain a big if. We do have a second rate hike that they cast, and the question is whether the markets will start to stumble as a result of the concerns of tightening the money pot. The QE bubble isn't going to just go away. We talked about this, and the question is how is it going to deflate? Is it going to burst, or is it possible to actually deflate it in a more calm fashion? We also talked about if it's going to be a slower deflation, like a Goldilocks landing, soft landing that we talked about. I think the only remedy there would be just the huge confluence of new technologies that are barreling their way forward. But a lot of these are very new technologies, and we all know what happened to the internet in March of 2000 for the next couple of years. Despite all their great business, well, the number one internet companies back then had great business models, and they're around to this day. They're worth billions. They're super caps. These names like Google, Facebook, Amazon, eBay, and so forth. So I think that's a big if. I mean, technology is certainly going to barrel its way forward. It's great. I think it's going to be fantastic to see what happens in the next 10 years. But in terms of markets, you can't. I don't know if that's a real strong argument for saying that the QE bubble will therefore deflate slowly. History just has shown that QE, when you have bubbles, very large bubbles, they don't deflate in a gentle manner. It's just not part. It's just not part of the market. So just keep track of price volume action in your names. That tells you everything you need to know. Speaking of which, another name that had good action recently is Z. That had another pocket pivot and a pocket pivot breakout off a little handle yesterday. But as we all know, buying on weakness is generally a better prescription in this kind of market. We also had another stock with two pocket pivots. That's ANET, Arista Networks. And that one also had a pullback yesterday. It had its two pockets in the last several days, but yesterday had a lower volume pullback. What else on the focus list? We got the AGX, and we put that one on a while back on that gap higher on the 10th of November. And then the next day it had a lower volume pullback, and then it's just off to the races since then. Right now it's sitting at its 10-day moving average. It seems to be acting fairly well. We've had a couple stuff stocks like this SXC. It's a coal stock, and the Trump administration has indicated that they want to bring back the coal industry, resuscitate it, and these types of names often trade in wide bands. So that it broke through the 20-day as it's doing is pretty normal for these types of names. The way to buy these essentially is when they look pretty ugly, and then keep your stops real tight. But they are a bit sloppy when it comes to the way they trade. The other stuff stock is MOS. That's a fertilizer stock. And again, same thing. You'll see that this one seems to be trying to respect its 20-day as it moves higher. But again, buying these when they're ugly. I mean, right now it's hovering around its 20 days, so maybe it's buy somewhere in there. But use these moving averages as your guide. So when you get into a position, you're risking maybe 3 or 4% at most. We had Square. We talked about that a while ago, and it's rounding out its basing pattern pretty well here, and got support at its 10-day yesterday. It opened and it went a little lower into the 10-day, and then it has had a nice bounce since then. JD, it's a internet retailer.
I think this one's got problems, I think. And yeah, and a lot of that, if you look around at, say, Baba, and you look at Baidu, and you look at Momo, and you look at Weibo, they're all just coming apart, which tells you something's not quite right in China. And I'm wondering if that might be something to consider in terms of the market. So. But my concern right now is that we could be forming a big top. So, but anyways, go ahead, continue with the name.
These Chinese names have gotten hit hard. But they got hit hard earlier on because, again, it was because of the Trump election, the Trump win, that he would start to be more isolationist in his policies, trade agreements and so forth, and that was caused concern for all these Chinese stocks. And the second reason why they might have problems, the second headwind, is that the Chinese economy is still not nearly out of the woods. I mean, we all remember last, I think it was last August and then last January, not last August, August back in 2015, but then also January of 2016, where the markets came apart because of the problems over in China with their economy. And that still remains. There's still bubbles over there. So these Chinese stocks have these two major headwinds on them, and you can see that their price action reflects that. So JD, one that may very well come off the list.
I say short it here. Use a 50-day line as your upside stop. That's what I say on JD. I think it's heading back to that low under 24. That's my thinking.
Yeah, and it's if you do that, your risk is pretty minimal because it's still pretty close to 50. And it's, as you can see, everything's contextual in the markets, and markets have gone much higher, but JD is going flat. It just can't seem to get. I mean, it looked like it was going to finally take off on the 7th when we put it on. It had a pocket pivot, and then you buy these on weakness. It's close to its moving average, and you could flip and do a shorter. You could, if you haven't sold it already, you could move to cash, and your loss would be pretty minimal, maybe 1 or 2%. I think that pretty much covers the list. There's Qualcomm, and that's the stock that just kind of has a mind of its own.
Short that one too. That's another short. Use a 50-day line as your stop. It's busting now, so it looks like it's got problems to me. So I actually flipped to the short side of this a couple of days ago, just because my general approach towards Qualcomm has been to buy it on the pullbacks and then sell into the moves higher. And when I shorted it, we got some volume 3 days ago right here at the 50-day line. You can see that it picked up, and that to me told me it was weak. So on the bounce yesterday, that looked like a short. And now, to me, it looks like it's going to bust and break this low here. I think it's like 63, 67. No, I'm sorry. Where am I here? 63.95. So that's what I would be shorting that one. So, and that's probably going to that is going to come off the list. I think it's got some issues. Anyways, go ahead, Dr. K. Sorry to interrupt.
One two can't seem to really manage to keep pace with the market. I mean, even the NASDAQ 100, which is big caps, that includes stocks like Qualcomm, that hit new highs, and it's still at new highs. Whereas Qualcomm's really nowhere near. It hasn't been able to get a good running jump at its old high level of what is it? Recent high of 71.62. So yeah, I think should we start talking about some other names? Because I think that covers.
No, I'm going to tell you what I think about this market. I'm not so sanguine about this market, and I think one of the issues here is that I think that smart money, institutional money, will use the hype around Dow 20,000 to distribute stock. I mean, look at the market. Look at this move on the Dow since the election. That's a huge move. So what, it's just going to cruise through 20,000 and just keep going forever? You've got people all over the place in the media babbling about Dow 20,000. They went and ordered a bunch of Dow 20,000 hats on the floor of the NYSE. and I don't think anybody's going to get to wear them anytime soon. But the thing that I noticed, and I've noticed this for a while, since the election, it's like, yeah, the indexes have trended higher, but mostly it's been financials that have led the way. And if you look at the Dow and you look at the XLF, they're pretty much, let's see, you look at here's the XLF here, and you look at the Dow, and they pretty much look the same. So it's mostly been, the most uniform moves have come in the financials. And of course that's been stocks like JP Morgan and Goldman Sachs. And of course we missed these entirely, even though there were gap up moves, but these were hard to gauge. I mean, the idea was that the Fed would be one and done, but I think the surprise for the markets here is that the Fed is saying they're going to impose 3 more interest rate increases during the next year. So I think that's why, if we had been one and done, Dr. K, I think you would have seen gold rally. Instead, it's like, holy cow, 3 more rate increases. And like we were talking about this, I think, last week, and you were pointing out that the real question here is whether the Fed is able to achieve a soft landing. And of course, whenever we bring that term up, you and I both have a good chuckle because they've never been able to achieve that. But barring a soft landing, do they just end up crashing the market? And that could be what they're ending up doing here. And so there are a lot of clues, I think, in terms of individual stocks. Like, I'll just look at the big stock NASDAQ names. They rotated into those on Monday, I believe, or Tuesday, and they've been coming into those over the last couple of weeks. But you look at an Amazon here, this is just a head and shoulders, like a fractal head and shoulders. You guys can see that, right? So look at this. Boom, boom. Here's your fractal head and shoulders. You get up close to the 50-day moving average, okay, on the daily chart. But if you look at the weekly chart, which I'm going to find here somewhere, there it is, you'll notice that it's basically reversed at the 10-week line. And you can see the head and shoulders formation there, okay? So, and I guess it's not even really fractal, but you see the right side of the head is defined by this massive breakdown on the right side. So to me, this turkey's a short. It was a short this morning at the 20-day line, and it's probably heading to the 200-day line from here. So, you know, that's the story with that. So that looks suspect to me. Look at Google. Let's take a look at this. This one's actually come all the way back up past its 50-day moving average, but on a percentage basis, that's only like 2.5% past the 50-day moving average. Now, if we look at it here, you had a breakout attempt 8 weeks ago, or say, yeah, 8 weeks ago, and then that failed. So now you've rallied back up to the breakout point, and you're starting to fail on the weekly chart, okay? That looks like a short to me, okay? Quad witching today, someone's pointing out, yeah, that should help make things a little funky, but it doesn't change the fact that the market could be topping here, and I think you got to watch what the stocks are telling you. You know, so there's a handful of stocks that have acted okay, like Netflix has been trying to act okay. We got the Square, we got the Z, we got the ANET, we got the NVIDIA. But to me, I think in NVIDIA, I'm short the stock right now. It's hanging here at 98.75. It's up 4 cents. And you know, maybe I got $1.50 in this as a profit. We'll see what happens. I mean, I'm fluid with this. I'll stop myself out, but I'm willing to risk 0.5%, 50 cents. So 100.89, I think it is. Where was my entry point on that turkey this morning? Let me take a look real quick. Looks like 100.39. Okay, so I'm going to be at 100.89. That's my stop. So I'm just going to let it run, unless I see something more material, say on the 620 chart. But my theory here is, and if you go back and you look at these, go back and look at Apple in 2007. Apple actually topped at the 200 price level in I think it was October, actually January of 2008. So right up to the top occurred in October 2007, and then Apple came back after that and it cleared the 200 level. I know that got a lot of publicity and everything. Was a big deal, and that was a short-term top at least for Apple. At that point, we went into the 2008-2009 bear market. Okay, so you got to watch something like that. It's now turning red, so we're 98.62, down 9 cents. The Dow's down 8, so we're turning lower. So the other things I've looked at, you know, the oils. Everybody came into the oils a couple of weeks ago when the OPEC nations announced their their agreement to limit production, and so you got a gap here in a name like Silica, and it ran up, and it was actually acting pretty well, but you notice it's a little wedgy, and when the non-OPEC nations last weekend, or this past weekend, announced that they were going to agree to the OPEC cut, and they're going to cut 530-something thousand barrels a day themselves, the market sold into the news, and you had a sharp break in NVIDIA, and so not NVIDIA, Silica. So what you have here now is a breakout here that may be failing, and so what I look for is some kind of bounce off the 20-day line and a reversal. So today you got Goldman Sachs comes out with a buy recommendation on Silica holdings. And of course, I can remember when I made like 85% on the short side in 1 month in, I believe it was, when was a flash crash, Dr. A? Was that May? Yeah, it was May of 2010. I remember Goldman came in and put a big buy recommendation on U.S. Steel, and the thing jacked up 4 or 5 points, and I just came in and shorted the crap out of that thing, and it rolled hard at that point. So let's see, maybe I can go back. You guys want to go back and look at that? How many people want to go back and look at that?
I just switched my mic. How's this coming in? Any different, or is this as good?
What's that, Dr. K? Are you talking?
Yeah, is this coming in just as well as I just switched onto a different mic? Is this
I can hear you okay. You might turn up a little louder if you can. But let's just go back.
Is it better or worse than before?
What do you guys say? Much better, everybody says.
Much better. Great.
Yeah,
okay.
So that's good. So you can stay there with that. That sounds good. I'm going to go back to 2010 and just show you this real quick. But you know, Goldman is notorious for this was it right here. And I just remember this because I had been working the stock off the peak here once it broke the 29. See how you had a failed breakout here? So once it broke, I started getting short in here a little bit. And then they came in, and right here, that was they had the stock up like, what was it, close 55? This is actually in the hundreds, I think, at the time. I'm not sure. But anyways, I got a heavy short here, and I made a nice killing for the rest of the month on that, getting about 20-something percent on that. I got a whatever it was. But in any case, that Goldman, I know Goldman, okay, and what they do is if they got a client who's got a bunch of stock to unload, guess what? They're going to put a buy recommendation on it. And that's not uncommon for a lot of sell-side analysts to call up a client and say, hey, tomorrow we're going to put a buy recommendation on X, Y, and Z, so why don't you buy 50,000 shares through us? And they get some business through their desk. So that's not uncommon. I mean, nobody's going to admit to it, but I can tell you that I know enough hedge fund guys who've been tantalized with those kind of inside info type things. Anyways, let's look at a couple other things. I would watch the airlines here. The airlines have had a great move. I mean, that's a huge tear. If I really had any brains, I would have played this on the long side. But the thing to watch for here, I think, is if you look at Delta, and I'm actually short this one, got shorted again up here, because it's coming off of a short handle. It's a 2-week handle, okay? And that 2-week handle occurs after you've had something like this. Boom, straight up. I mean, that's just straight up, okay? So is a 2-week handle going to be enough to set up a launch past, much higher? No, I don't think so. I don't think it's long enough. So at the very least, I think this thing would need to come in and fill out maybe a handle to this. But it could also be a pod failure. So the one thing I'm watching for here, and I'm already short the stock on this theory. I'm also shorting stocks on the theory that we could be getting, we're going to have at least a correction like Dr. K was pointing out in March of 1999, the Dow went through 10,000 and then corrected 4.8%. I mean, if you got a 4 or 5% correction in the indexes here and you were short the right stocks, I think you would make a fair amount of money. So, I'll take what I can get here. But as far as this goes, you can see you're trying to break out. This is failure prone. So once it breaks the 20-day, that confirms it. But I'm already on this thing up near the 52 level and getting a little bit of love here. So, that's so far working out, and it's turning red. And last night, I guess Kramer was pumping the stock, and that sent it back to the upside. I think he's also pumping Silica. That's another one I'm short on this rally above the 10-day line. So when it's down at the 20-day line and you're on the verge of failure after a big break, so the break off the peak on Silica is telling you something's not quite right here. And when you see other oil names, and I've been shorting other oil names as well, PXD is breaking down, CLR is breaking down, and these are all starting to become late-stage failed bases because remember, oils have been moving for a while. This isn't anything new. I mean, there's a weekly chart on CLR And you can see it's been in an uptrend for a while. Here's SLCA. It's been in an uptrend for a while. So now you have this OPEC agreement. Is it that big of a deal? What if the global economy weakens? Then what? I think a lot of these things have priced in a lot of the good news here. So we'll see what happens. But I think, you have to look at some of these late-stage failures. Just like Qualcomm, I think it's morphed back into a late-stage failure. And I got a sense of this 4 days ago when it was stalling out at the 70 price level. And I tried shorting this move into the 50-day, then I flipped and went long, and then the stock moved up, and then I could feel it kind of running out of gas, so I flipped out of my long and went short just to test it. And then I got some interesting feedback 3 days ago. And if you look at this, you can see the break here, right here, and that's coming on heavier volume. So now this is telling me maybe this thing has a problem. You get a weak rally yesterday on light volume, and it stalls and closes mid-range just above the 10-day line. And today I just went ballistic on it, and now it's coming down. So now I'd look for it to undercut these lows, possibly, if the market continues weak. So anything could happen here, and I think this market is subject to a lot of funky manipulation. I think the whole Dow 20,000 thing is just one big setup, and they're sucking in all the idiots, and get all excited about it. And I think you have to keep your head here and watch what the stocks are telling you, because the stocks are telling you a different story. Coal is supposedly going to benefit from Trump's policies. I kind of fell for that the scenario, but it doesn't seem to be panning out on the charts. So Arch Coal is a reissue or reorg of the old Arch Coal. I think that was ACI. Now it's ARCH. But this looked pretty good, and you were getting some pocket pivots. Like you had one here 5 days ago off the 10-day line, if you guys can see that. Let me just, here, it would have been here, this particular day here, and there's a volume. So that looks pretty decent, but it's just kind of rolling over. And at the same time, you're seeing some of these other coals. I thought CNX looked okay, and of course that's the big coal, but that's failed on a breakout attempt. This SXC, I don't know, it's looking kind of poopy to me. I'm not really that interested in owning it. So I think that should probably come off our list, but we'll discuss this later.
Yeah, the thing that's interesting about coal is that, it's been a #1 industry group for many weeks now,
Right.
Even before the Trump election. And you can see that a lot of these have relative strengths, 99 percentile. So they've already made a pretty good move.
Right.
The question is then, especially if you look at SXC off a weekly chart, the thing has come from $2 all the way up to 13.
Right.
And it's 12 right now. So that to me is an issue. How much longer can coal maintain its leadership?
Right.
And buying these things when they're ugly generally is the recipe if you're going to buy them at all. You buy them when they're down there, so you know your exit point then is contained at typically hopefully less than 5%, if not even more stringent than that. So just keep in mind that everything's contextual, and this thing has many of these coal names have come off very low lows, and they're up often several 100% from those lows.
Yeah, and I think, I got excited about these names, and I think I just got suckered into this, and I think they're crap now, so I'm not interested. Take that off the list. And I think what you're seeing overall, a lot of stocks may be having problems. Look at a stock let's look at Martin Marietta. This thing's way up there. It's hanging along the 20-day line. This looks to me, notice how every time it tries to rally over the last 1, 2, 3, 4, well, make it now 5 days. It's, I'm sorry, the last 4 days now, and it broke down 5 days ago. That would have been on Monday. But the last 4 days, it's tried to rally a little higher each day, and then you'll notice how each day it's not able to rally as high. So you rally up here on the first day, then you rally up here on the next one, then you only rally up that high yesterday, and then today everybody's getting excited again, and now it looks like it's going to roll over. So these I'd also be watching as potential short setups. And there's stocks, and of course, for Trump's going to spend tons of money on infrastructure, right? But think about it. Whatever happened to all those shovel-ready jobs that Obama was going to have out there when they wasn't it like an $800 billion infrastructure bill or something that got passed? And what did that do for these names? It didn't stop them from. They had some moves, and then they all topped. So what's Trump going to do? So I think that the whole thing with Trump is, I like him and I like his tax cuts, But in terms of everything else he says he's going to do, it remains to be seen, you know, and whether he can fix the structural issues. Basically, the fact that the Fed's got, what is it, $5 trillion of bonds on their balance sheet, and how are they going to unload those in a way that creates a so-called soft landing? Try not to laugh, okay? And so that, you know, I'm not so convinced. We saw, you know, defense was going to benefit from Trump. Go ahead. What?
The market.
Go ahead.
It's the biggest bubble the market's faced, you know, and you know, arguably, it's arguably a bigger bubble than what we had in 2008, and also
How about
the
ever? The biggest bubble ever.
Yeah, it's very possible. I mean, there have been arguments put forth that 1929 was not nearly as bad. And again, you know, the dot-com bubble and the 2008 financial collapse. A lot of comparisons have been made to where we are now and what led up to 2008, and the comparisons always are generally talking about how now is worse than then, and that you know, what the Fed has done is basically just bandaged over the issues that caused 2008 and reignited certain bubbles that are even larger than the bubbles that burst in 2008. So, you know, we could get the mother of all bear markets. We know that the dot-com bubble created the mother of all bear markets in the NASDAQ. That thing had the worst sell-off in its history, where it fell peak to trough 78% over a period of 2 years. So it's not impossible for the same things to happen to all the averages. You know, the Dow lost 90% of its value from 1929 to 1932. And again, you know, these tops can be very difficult to call, especially in a manipulated environment like we've been in. You know, the number of false topping action or false signals where the leaders are coming apart and it finally looks like we're going to get a meaningful correction doesn't materialize. Because even though QE is diminishing, I'd say, I mean, obviously in the U.S. they've stopped that, but in other central banks it's not necessarily diminishing, it's still coasting. And the question is, you know, the interest rate environment is being tightened, and that, I think, is the spark for a potential bubble burst. That's the way it's happened before in history, and I don't see why it wouldn't happen this time as well. So it's all a matter of looking at your price volume day to day, and that tells you everything you need to know. I mean, it's no coincidence that O'Neill had about 11 guys in his managing his money for him back in March of 2000, and we were all very protective of what we were doing because we're all competitive, and so no one knew what each other was doing. But it's no coincidence that I think everybody was out of the market. All 11 guys were back in cash the third day off the top in March. You know, the evidence was there. Same with the flash crash. You know, my direction model went to a sell signal before the flash crash, shortly before. It didn't know that was going to happen. It just knew something wasn't right. So that's how you manage your portfolio. Just let your stocks tell you what you need to do.
Yeah, it's the stocks where you make all the money. I mean, during the flash crash, I went up 85% in one single month. So, and that was shorting stocks and focusing on what the stocks were showing me. So, you know, when it comes and you're on the right side at the right time, it can break pretty fast off the peak. So, so just going through this whole concept of, you know, the Trumpkin stocks, the stocks that were perceived as being beneficiaries of potential Trump policies. So the defense stocks, okay, they all rallied. They gapped up and rallied like Lockheed. And then, you know, because Trump's going to spend bazillions of dollars on new weapons, blah, blah, blah. But now he's talking about, you know, it's the old, I remember back in the 80s, they used to talk about the $700 toilet seat on the Lockheed planes, and that was a big joke. But it's true that there's a lot of funky procurement stuff going on in the Defense Department and with defense contractors. And so Trump comes on and says, hey, we want more bang for our buck, and guess what? All these stocks bust. So you got Lockheed. Raytheon is another one, but they all look the same, and they all are hovering around their 50-day moving averages. They look like shorts to me. So, but yeah, that just shows you the risk and the fact that there is a certain reality setting in about what Trump's going to do for the market, and it's very rotational. Like they first they come after the Trump stocks and these material stocks and the steels, and they all come roaring up, and then they're selling off the techs, and then the techs all come back, and the stuff stocks take a break, and then you get the oils moving on the OPEC news, and then more recently this week you had some of the tech stocks moving back up, and now they're all rolling over. So you just get this rotation from one group to another. And that is something that O'Neill used to tell me was representative of distributional or rotational distribution, where the institutions are using the ability of certain stocks to influence the indexes, and they'll pile into those while they're selling everything else. So they want to provide cover for their selling, and they're always doing that. So think about this. If I were a big institution, and I've been big and long stocks since 2009, and a lot of them have, and I need to unload and start selling stock, what's the best way to do it? Well, you dangle the Dow just under 20,000, because of course 20,000 is a sure thing, right? Didn't everybody see the Barron's cover this past weekend? And so, why the Dow is going to reach 20,000 before the end of the year. Maybe it does. Maybe we sell off 5% here over the next few days, and then right into New Year's Eve, if somehow they jack it. Certainly, if you're at 19,841, you're a little over 0.5% away. So if they wanted to jack the Dow up there and gas it up to 20,000 by going after some of the bigger names in the index, since it's a price-weighted index, I don't doubt that they could do it. But, if you think about it, dangle it underneath the 20,000 level, because that still leaves the game open, because, of course, we're obviously going through Dow 20,000, right? It's a sure thing. So all the dumb money is going to sit there trying to buy. As long as we're dangling below 20,000, it's much more attractive. Once you hit 20,000, then the fish may stop biting. So, I'm trying to look at it from that perspective, and also knowing what I know about the institutional mind, having been the head of institutional services at O'Neill when I was there. And we had, what do we have, Dr. K, like 600, 700 clients at the time. So, you get a pretty good idea of how they think. And they're big, and they need buyers to sell to when they want to bail. And if you have the Fed raising rates 3 times next year, guess what? They're pulling the punch bowl away. So you got to think about these. Were you saying something, Dr. K?
No, I wasn't.
Okay, I thought I heard. Because I think I might cancel you out if I'm talking, whatever. Everybody says much better on Dr. K's audio. Somebody's asking a question about what's happening here.
Strange. I don't know what that. I think that was on your end, because it was all quiet here.
Okay.
And how, like, sometimes these internet connections can bleep, or I think that's what happened.
Right. Okay. So I don't know what you're asking about Mercury Systems. This one never has hit my radar screen. What, are you going to buy it? Good luck. It's interesting how people want to buy stuff. I noticed on my Twitter page a couple of people want to get in pissing matches with me over certain stocks and whatnot, and it's amazing to me that people can't see what's going on right in front of their face, but I can see it and I can smell it, and moving to new highs in my account for the year, and I'm short and making money. That's all I know, and we'll just see where I end up covering, but I do have my rules for covering. I came in 100, well, I actually got about 160, 170% short on the move up today, and now I've dropped that down to about 120. So I will cut it by a third or so, or a fourth, I'm sorry, as we're coming down. Because I've talked about this many times before. I'm very, very wary of a QE market, and they can snap it on you pretty quick, so I always want to be trying to short into the rallies, and once I get the inflection point, then I want to start taking some profits and just building a solid cushion. So then I can operate maybe 80 to 100% short and see if I can score that way. Anyways, let's look at some other names here. I think Adobe was a short this morning. They came out with earnings. Look at that. And you got a nice reversal here. So if you look at this on a weekly chart, you can see that thing is way up there. And it's reversing there. So that, to me, looks like a late-stage failed base. Bada bing, bada boom. There you go. So you could have shorted it earlier. You'd have 5 points on it if you were alert to that. I actually saw that. I was going to put it out yesterday after hours, and I blew it off. But I've been too busy with other stocks that I'm shorting. So let's look at some other ones. Look at Goldman Sachs starting to come in here. We're down 3 off the peak. I'd watch these too. If these start coming down hard, then we got some problems. We put TTD back on our buy list, and that actually did have a move back up above 30 earlier in the week. And if I was in this thing right now, I'd probably just back away because it's a smaller name. And if this market starts getting into trouble, which it looks like it is, and we're making lower lows right now across the board, down 17 on the Dow, Nasdaq's down 17, which is a fair bit more than the Dow percentage-wise. But this probably isn't going to make it, so be cautious there. You notice the Delta Airlines, I talked about that. That's heading lower. So I'm short right now, a 25% position. If it clears the 20-day on the downside, I may ramp that up to maybe 35, 40. We'll see. So all I know is nothing makes me more nervous than when I'm making pretty good money on the short side, because they'll take it away from you very quickly. Anyways, I want to get back to some of these material stocks. So VMC, I thought that was a short at the 20-day line. For anybody who follows me on Twitter, been talking about this one in Martin Marietta, and now it's failing at the 20-day line. So if it busts a 50-day, kiss it goodbye. That's what it looks like on a weekly chart. It's had a long run. Here's a breakout. It's coming straight up from the bottom. That is failure prone. And if you get some confirmation, already you're getting some confirmation because you have violated the 20-day line. And we know that the first sign of a late-stage failed base short sale setup is always going to be a clean breach of the 20-day line. Notice how you get a little teaser here about 3 weeks ago, and then it rallies back up, and now it's rolling over. So these names could all start coming in. And all this stuff that's been rallying on the basis of the wonderful Trump policies that are going to make our lives great again, I'm skeptical. I mean, as much as I prefer Trump's policies over Hillary Clinton's, I'm still going to be objective about what this all means for the market, and I'm skeptical that we've hit nirvana, and we're going through Dow 20,000 on the way to Dow 38,000, as Jeffrey Hirsch of the Traders Almanac. His father was Yale Hirsch, and believe it or not, they were a client of ours at O'Neill when I was there. I don't know if Jeffrey's as good as his father is, but I think you're getting a little bit carried away if you think we're going to Dow 38,000. He was also saying something like we're going to have an 8-year rally, super bull of 8 to 9% a year. I don't know. Does anybody know about that one? How many of you guys heard that one? Jeffrey Hirsch was saying that. I think you can Google it or something. But anyways, we're down 20 on the Dow. I think it's going to get ugly. And it is a triple witching day, so they'll alibi the heavy volume on the triple witching day. So anyways, where were we? Where was I? Where are we? Let's see. Look at Intel. Here's Intel getting jacked. Why is it getting jacked? Because it's a Dow stock too. So it helps generate a nice breakout for the NDX. Here's the NDX, okay? And it also helps in getting the Dow to close to 20,000. So it serves double duty that way. Isn't that amazing? And now look at it getting slammed. So that was a short up there. Cisco is another one they were pushing up, and now it's reversing. That's probably a short too. Apple, I'm short this thing. I think it's a short. They pushed it back above the 50-day moving average. But for those of you who've read our books, Short Selling with the O'Neill Disciples, we talk about rallies back up through a moving average. A lot of times the stock won't stop at the moving average. Instead, it will go past maybe 3 to 5%. So how many percent has Apple gone past the 50-day line? Can anybody answer that question? No, about not even 3, okay? So you're within range, and notice you see a fractal head and shoulders here. This could be the right shoulder, but I think this is heading lower, and I'm short it, okay? Here goes NVIDIA now is 98.02, 98.01. It's starting to reverse. Looking pretty good here, at least for shorts. Look at Mobileye. I think this one's probably heading lower. But it's kind of down there. I'd watch names like Now, ServiceNow, I think is probably a short. Use a 10-day line as a stop, heading for the 200-day line. Salesforce, look at this. This is pretty ugly. That looks like it's heading for the lows. Workday, here's another ugly one. So while everybody's talking about how great some of these stocks are doing, there's a lot of crap out there, okay? And I just want you guys to know, now that Trump is president, there's a couple of things. Christmas is legal again, and also you can speak your mind about anything, so you're going to hear me cussing a lot. But not too badly, so just, mild words like crap. But I spell it K-R-E-P, so it's not really the actual poop word, okay? So just want to make that one clear. I even like, you know what? Hey, Dr. K, how about a VIX buy signal here on the UVXY? It's going to turn. No?
Yeah, that's taking a lot of patience, especially with the markets have been so quiet since July.
Yeah.
I mean, I wrote a report about the S&P. It's the quietest it's ever been since 1957. And so, it's interesting that, we have broken to new highs on these averages, but it's still a baby stepping market. If you look at the daily of any of these averages, like the S&P, you'll see that prior to July, the intraday ranges tend to be larger overall, going back from, say, July, just go back a year from prior to this July, and you get more volatility. And since July, things have been very quiet. So it's almost becoming normal for the averages to not be up more than 0.5% on a day-to-day basis, which is pretty unusual. And that's got to change. I don't think the market's going to stay so quiet. For
Right. No,
duration.
it's not. I think it's changing now. So I'm long the UVXY too. So, not making huge money on it yet, but I bought along here along with some of my shorts. You get some pretty good leverage on it because you can buy, 10%, 5% position if it really goes. You get a lot of mileage out of a little bit. So the Dow's down 29, pushing 30, NASDAQ down 21.95. Someone's asking, Gil, can you show how you're using 65 EMA for shorting? I'm not really using it right now, but a lot of times I'll watch and see, whether stocks find support or resistance at a line like that. Like if you look at, say, JD, this is kind of interesting. I do have, do I have a 65? No, I don't have one on here. But you would notice how all the time it's bouncing below the 50-day line. It stops at around 25.50. If you drew a 65-day exponential moving average, you would find that it's actually right along these lows. So, it's only a reference point for resistance or support. But again, as I pointed out with Apple, a lot of times you can see stocks go just past the moving average because everybody uses all these moving averages. So the crowd, it's very obvious to the crowd. So one thing I note, and like I said earlier, I think this is a short now. And one of the things maybe to note is that each time it's had these great pocket pivots, it's stalled. Okay, this one was a little better, but it immediately came in, and then you get this stalling as well. It wasn't a pocket pivot 3 days ago. But notice the other thing is the buying volume is diminishing. So if you can't get any progress going to the upside, given the above average buying volume, then maybe what it's telling you is that they're exhausting the buyers and this turkey's going to bust to the downside. That's why I think it's a short, based on what it's doing. A few days ago it looked like a reasonable long, now it doesn't. So, I don't get rigid with stocks. I take what they give me when they give it to me, and that's all I need to know. Anyways, where were we? Any other great questions? Look at these like Finisar. I know, what's his name, Crummer. He was pitching Finisar, and these guys came out with a $480 million convertible bond offering. But now they're going to bust 50-day, and that looks like that's the end of that. But it's had a pretty big move, so that could be ready to blow. Sienna, here's another one. Had a viable gap up, but it's starting to look like it wants to fail, but we're coming into the 10 days. So, these were names I was looking at as potential buys a little while ago, and now they're all starting to fail. Look at Lumentum. This is one. I think this one's going to blow. I think it's a short here. It's probably going through the 50-day line. It trades 1,031,000 shares a day. So that's kind of borderline liquidity for me. And so this looks like you had a breakout attempt here. It's now failing. You're underneath the 20-day line, so you can use either the high of the day at 41.20 or you use the 20-day line at 40.12. The stock's trading at 40.05, so it doesn't give you much room. But that looks like it wants to blow. And again, this is what's been bothering me for the last few days. And I just think that you have a market that you're starting to see some cracks underneath the surface or under the hood. I'm seeing a whole bunch of short sale setups suddenly showing up, okay? And that just tells me what's happening. I don't need to pontificate about what the indexes may or may not do or what they've been doing for the last 3 months or what they did in 1999 or 2015 or whatever, I just watch the stocks, and they'll tell you everything you need to know. Anyway, let's go through some more crap here. See, I use that word again. Let's look at Parsing Energy. Here's another one that looks like it might break. There's a lot of these. Here's another one. This one I shorted actually up around here at 62, and then I covered the other day on the break and thought I would come back and reshort it the next day. I think that was yesterday or the day before, I forget. And I couldn't borrow it all of a sudden. So, but this is one that's been moving on the infrastructure baloney. So so you can see some of these look vulnerable. Here's the biotechs. Okay, the biotechs were a group that rallied with the Trump. They were Trumpkin stocks, so when Trump won, they rallied, and that's because Trump's going to be nicer to biotechs than Hillary Clinton was. But then Trump starts babbling a couple weeks ago about drug prices being too high. So what happens? They all gap down, and now they're all the gooey kablooey here. So let's see, Gilead. It looks weak. Celgene. These all look weak. So all of these, the promise of Trump came and went, and that was it for them. So now we need to see the financials start to come apart, along with whatever else has been holding up. The oils look to me like they're in trouble. I noticed, interestingly, today you have silver is up along. What is gold doing? Is gold up? Yeah, gold is up too. So interesting. Maybe you're at an extreme low, and these things are going to have some sort of a reaction bounce. But not like I'm going to play them. So, anyways, where are we? It's
just say quickly that one of the reasons this time can be worse than 2008 or say 1929 is because in those periods the Fed had room to gas the system by reducing rates.
Right.
You can't do that now. In fact, these are the lowest rates that we've had in history, in the entire history of the country. So, you can't just put that under the rug and say it's not an issue. I think it's the biggest issue out there. And so if the markets start to unravel, and I think they know this, the Fed knows this, if they start to unravel, they could either lower rates again, but that'll cause a lot of distortion and loss of confidence. And my thinking, and from what I've heard, and I can't say this is 100% factual, but September 9th, the markets got very rattled on just that. One of the Fed governors said that they want to hike rates, and the markets sold off on that news. But that was an alibi. That was a total alibi, and they were actually very manipulated. And they've been manipulated since in this manner to kind of push them higher. Do you have any idea, or does anyone have any idea how they could manipulate the markets higher without quantitative easing? Because that's not really a factor anymore in the U.S. markets. And I'm stymied on that. Because if there's something going on behind the scenes, and we know there is, how do they keep the markets from unraveling and undoing what they've been doing since 2009 with all this QE program, the QE program that started? How do they prevent that unraveling? And I don't have an answer. I don't know all the tools.
I don't think they do. I don't think they can. So, and that's the danger, unless you start getting intrinsic money flows coming in, organic money flows, so to speak, in a big way. I don't think that there's anything out there really to push too much further. So, the other thing is if the economy starts booming and it starts spitting off cash, which is what happened in the late 90s, and that helped along with the easy money policies of Greenspan. I remember O'Neill telling me it's like the later cycle of a bull market will occur because you're getting the economy's spitting off a lot of cash, and that starts going into the market. You don't really have that situation now. So, as the Fed starts raising rates, it usually, what was it, like 2 or 3 rate increases would finally kill the market, and that was because as the Fed was tightening, you were still getting the economy spitting out a lot of cash. We don't have that. So if they're starting to tighten, and they're talking about 3 rate increases next year, what's going to hold this thing up? So I don't know. I could get nasty.
Historically, Martin Zweig used to talk about 3 steps and a stumble, because historically, if you look at the 3rd rate increase in a cycle, that would dislodge the markets. But this time around, and also the prior times, you didn't always get 3 rate hikes. Sometimes you get 1 or 2 that burst the bubble. That happened in 1929, happened in 1987, and this time we have 2 now on record with the Fed saying there's going to be 3 more. And I'm just quite surprised that that hasn't jarred the markets. The markets are still, in an uptrend. I mean,
that's because they have the dumb money coming in that sees Dow 20,000, and of course, Trump is going to fix everything, and it's all going to be nirvana once again. You got guys on TV. I was watching, was it last night or the night before, that all you need to do is buy a S&P index fund and you're going to make a ton of money. Yeah, it's so easy, you know, especially after the market's been on an 8-year bull
That's
market.
like
So
1987 when they said the markets aren't going to correct anymore. It's up, up, and away from here.
right. So that's what's been pushing it up, and I think the institutions have been working it. I think it's rotational distribution, and so far it's been masterful, if you ask me. And maybe they punch it one time to 20,000 and then it rolls there. I don't know. All I know is I'm working on the basis of what the stocks are telling me right now. But it doesn't, you know, it can get bad, and I don't understand why people are so rigidly excited here, you know. Anyways, I guess that was a bad pun, rigidly excited. Somebody says when Reagan had 18% rates to bring down, right? So that was a stimulative factor there, but you don't have that now. So, you know, it's going to be death for the market.
I mean, you had room in every other bubble. Whenever a bubble burst and caused a substantial market crash or bear market,
right?
They always had room, monetary room to lower rates. Because again, they've never been this low in history, so there's no room there. I mean, and as far as going negative, I know Yellen is on record twice as saying she's not opposed to going negative if that's what it takes. But other countries are showing that negative rates are not boosting their economy. So I don't think that's really an option for the Fed. And I think if they did that, if they went to QE4, I think there would be a huge loss of confidence. Confidence levels in central banks as it is cheap.
Right. Anyways, okay, so let's see. Do we have any more shorts? I think, well, you know, the airlines, Delta keeps coming down. I guess you could look at some of the others. I don't know if they're still up. UAL, maybe that one's going to top too. Maybe that's one to look at. Now, okay, I would point something out here. You probably, if I showed you this UAL and I showed you that, which one would you rather short? Probably, see, the one mistake you can make is thinking that the one that's still up is going to be the better one to short, when in fact the one that's down is the weaker one, and that may be ready to come down a lot faster. So, you know, when they're getting ugly and you short them, they're either coming down or they're not. And if UAL is coming down from this position, then this is certainly coming down further from this position, okay? And in that case, this may be the weaker one that gives you more juice on the downside. But my guess is you may see both of these names come down. What's Hawaiian Airlines? I like that. That's looking pretty good. What about Love? They all look the same. So, but you know, look, check out the weekly charts on all of these. You can see Love. That's a big pod-like thing. See that? So you get straight up move off the lows. That's not sustainable. That's vulnerable to failure, or shall we say, failure prone. Okay, and you see this in UAL. Whoops. Big pod. You see that? There's a big pod-like pattern, or big punch bowl. It doesn't become a pod, a punch bowl of death until it breaks down. Hawaiian Airlines is a little better, but it's, you know, it's trying to break out of a late-stage base. It could fail, but it's probably the better one, so I really wouldn't pick on that one. AAL, American Airlines. Here, you want to guess what this one looks like, everybody? Bingo, a pod-like formation, but a weaker one. So maybe this one goes down and busts and breaks down. So, you know, I think these are definitely optimal shorts. So, let's see. I just tried putting out a short. I put out a little short on NOC here. Use a high of the day at 233.89, 234 as a stop here. That's pretty quick. That's less than 1%. But this looks like it might roll, and I'd look for a test of the prior low down here near 220. But that was, let me look at this on the 620 chart. I know you're here somewhere. Well, you were here somewhere. Let's see. Oh, I know what I need to do. Probably need to get this guy out of the way. Yes, there he is. So this one I'm looking at, you got a 620 sell signal here, and you push back up towards the 20 period line. That's the blue one. Short it there. So if it pushes back above, maybe I'll just cover real quick and get the hell out of the way. But you can see the high is around 234. What is the high here? 234 and change. Yeah, so I mean, that could be your stop. That's not too far away. The UVXY is now up 2 pennies. Whoa, look out. Maybe Let's see, what else? So, I mean, there's just a lot of stuff that looks like that. I'd watch Netflix. You know, somebody was calling Netflix their #1 internet stock. But notice here, you kind of got this, like, little double top thing forming out of this sort of big pod where you come straight up off the low. So a failure through the 20-day would possibly bring this into play as a late-stage failed base type of situation. Tesla is another one I think to keep an eye on here because this one is... it actually had a pocket pivot here. Okay, the only problem here is probably the whole world short this thing, and then it's sort of stalling up here. So it looks like it might be shortable again. I keep an eye on this one. So what else?
Oh, I wanted to make a quick comment on Netflix. Also, it's got some serious competition with Amazon, Amazon Studios is launching. It's been in the works for a while now, but they are launching a competing product, and they're setting the price points. Everything they're doing is designed to take market share away from Netflix. I don't think they're going to emerge the victor. I think Netflix has first move advantage, but nevertheless, it's going to be a serious headwind for Netflix because if anyone's noticed, Amazon is making a lot of great moves with their products. They're very cutting edge. Amazon Studios, which is one of their subgroups that a friend of mine runs, it's proving out, showing that collaboration of many minds is better than one mind, and they've already, basically the way that works is you have a lot of people working on the same script, and so it's like Wikipedia. It gests in real time, and then when you have a final product, you have dozens of these final products, and what's being shown is that they're winning BAFTAs, they're winning awards. They're much more effective than your old model. If you got the writer at home who sits and writes the screenplays and submits it, and the guy goes over hundreds of these things and picks one. That's an old model. It's a dinosaur. Again, that's all to be said that Amazon is very cutting edge, and the stock price reflects that. And I think Netflix is a great company, but it remains to be seen whether it can just keep expanding at the pace it has.
All right. Well, it's 10:32, and I hope I've given you guys plenty of food for thought here. So, you can see where you have some setups showing up on the short side. That's really where I'm at in this market. I don't really feel comfortable being on the long side until I see something setting up better. You can see we've even lost altitude in names like NVIDIA since I started talking about it, and it was, I think, in the mid-99 level. Now we're at, what, 97.84? Yeah, it was like 98, close to 99 about an hour ago when we started this webinar, and now we're making lower lows on the day on the 620. So, this could be a late stage failure as well. So even the best stocks got to correct at some point. Anyways, that's all we've got, you guys, because we're out of time, and I need to get back to my trading. So thanks for showing up. Have a great weekend, and stay cautious. And if you do try anything on the long side, if you feel confident, I don't know why you would, but if you do, make sure you keep tight stops and know where your out points are. So take care.
So long, everyone.